Let's work through a bank reconciliation example problem. So the problem says prepare a bank reconciliation using the following information on May 31st. So we're given a cash balance per bank of 8,700, cash balance per books of 8,500, $1,500 in deposits in transit, $1,000 of a note collected by the bank, a bank service charge of $100, and $800 worth of outstanding checks. So we have all of that information now up in the upper left, and we can reference back to that as we are preparing this bank reconciliation. So the first part of the bank reconciliation that you prepare is the per bank side. So the first line is cash balance per bank. We have that up above. What we need to do now is think about what gets added to that cash balance and what gets subtracted from that cash balance. So we will add pieces that will increase the amount of money that we have and the bank doesn't know about yet. So we have 4 different choices that we could add. We could add deposits in transit, note collected by the bank, bank service charge, and outstanding checks. Well, a bank service charge is going to decrease the amount of money that we have, and so are checks that we've written that haven't been cashed yet. So we're down to now deposits in transit and note collected by the bank. Well, if the bank collected the note, that means that they know about the note. So that does not get added on the per bank side. Instead, we will add deposits in transit. So deposits in transit are deposits that you have recorded in your books that just haven't gotten to the bank yet. So we'll add that piece here. Now, what would get subtracted? So now we're looking at either a bank service charge or an outstanding check. Well, a bank knows that they're charging you a service charge, so that doesn't get included here on the per bank side. Instead, we subtract out outstanding checks because the bank doesn't know that you've written a check. If you write a check right now, you know that you wrote that check. The people at the bank have no idea. So we have to subtract out those outstanding checks. And then when we add in deposits in transit and subtract outstanding checks, we will be able to find our new adjusted cash balance per bank. So let's start putting in numbers here. So the cash balance per bank we were given is 8,700. Our deposits in transit were 1,500. So if we add those two together, we get 10,200. Now, we subtract out our outstanding checks. Those were $800, giving us an adjusted cash balance per bank of $9,400. Now, we can work on the per books side. So per books is the company side. We're still going to start off with the cash balance. Here it's the cash balance per books. Now what could get added to the cash balance per books? Well, we already figured out that deposits in transit and outstanding checks were on the per bank side. So we're not dealing with either of those here. Instead, we're going to deal with note collected by the bank and the bank service charge. Well, a bank service charge is going to decrease the amount of money that you have. So we don't want to put that under add. Instead, we're going to put note collected by the bank. So what that is you had a notes receivable and the bank acted as the middleman and collected that money for you. You didn't know that that note had been collected yet, and so you have to add that here on your bank reconciliation. leaving us now with subtracting out this bank service charge. You might have known that there was a service charge for your bank, but you hadn't made that entry, or you hadn't recorded it yet in your books. So we have to subtract that here on our bank reconciliation. Now, once we do all of that, we can find our adjusted cash balance per books. So let's start putting in the numbers here in our bank reconciliation. Our cash balance per books was $8,500. Then we add in the $1,000 note collected by the bank to get us $9,500. Our bank service charge was $100. We want to subtract that out to get the adjusted cash balance per books of $9,400. So your bank reconciliation would look like this. You would have your per bank and then your per books. And if you notice, the adjusted cash balance per bank equals the adjusted cash balance per books. That is not a coincidence. The reason why you're doing this bank reconciliation is to make the two balances equal. So when you do a bank reconciliation, we had those changes to our books that we had to record. Well, we also need to record them in journal entry form. So the two changes on the per book side were the note collected by the bank and the bank service charge. Let's work on the journal entry for the note first. So when that note was collected by the bank, that increased the amount of money that you have. So we want to debit our cash for that $1,000. Now, why did our cash increase? Because our notes receivable decreased by that $1,000. So that's what your journal entry would look like there. Then your bank service charge. What would happen to your cash balance after a service charge? Well, it would decrease it. So we'll credit our cash for $100. And anytime there's a bank service charge or a bank fee, we're going to call that miscellaneous expense. So we will debit our miscellaneous expense for $100.